Hey guys, welcome to episode 2 of Exception Academy, where we'll be talking about what trading is and the type of trading we do. So, I know when people typically think about trading, they think about buying stocks for a company, buying low, selling high, holding for a long time, later retirement, whatever the case may be. Which is fine. That's not exactly what we do over here. We actually trade what we call futures and futures contracts. Now, what futures are is basically an agreement to sell and buy an asset at a later date. Um, think, for example, a farmer selling corn to a cereal company. A farmer is agreeing or will be agreeing to sell the price of corn at this set price at some time in the future, and that buyer from the cereal company will be willing to buy it at that price in the future. That is exactly what we're doing, except we're doing it with what we do specifically indices, the Nasdaq and the S&P 500. All we're doing on a daily basis, and I'll show you on both platforms, which you will be likely trading on as well if you're following me and want to do this. Also, we have TradingView or Trade of 8. On a daily basis, all we're doing is coming in and we're looking to see whether we want buy contracts or sell contracts to predict whether price is going to be higher from the future time we're entering the trade or lower. So let's look here for example. Let's say price is here and we want to enter get a buy contract. We'll buy here on TradingView, or we'll buy market here on Trade of 8. Price goes up from whatever that time is. Let's say it's 7:38. At any time in the future, we're going to sell that contract at a higher price. All that's happening. Or if we wanted to look lower, let's say price was somewhat crazy up here, somewhere here we're ready to sell. Enter that sell contract, price is lower. So the market will buy it back at a lower price, gaining us profit. So another common misconception about trading is you want to buy it and you want it to go up. You can make money in either direction. Whether you want to buy or sell, that determinant is solely up to us on a daily basis. Now, what you're going to get into if you're following me, what the Nasdaq and S&P is, the Nasdaq is just a tech sector of America. It's the top 100 tech companies. The S&P is the top 500 companies in America just as a whole, and it usually represents how the American economy is going. So you're not, let's say, buying specific shares or stock in companies. Let's say for the NQ Nasdaq, like Apple, Microsoft, or Nvidia. We're just basically trading the value of the Nasdaq, how though that overall sector is doing. And these sectors see so much volume, they see so much movement on a daily basis. It'll be really good for new traders to see, experience, and learn early on getting into these sectors. I always have the Nasdaq and ES pulled up together because these two pair are highly, highly synonymous of one another. Basically, you technically always see whatever the Nasdaq does, S&P does, and vice versa. You trade these together because when things get decoupled and things aren't aligning right, that can become influence for us to enter into a certain type of entry. We'll get more into that later, but that's why both of these are pulled up. I also like the futures market because it's super scalable. The risk is very low in comparison to trading stocks and other things, especially with prop firms, which I'm going to show you as well. So a lot of people ask me, what can I do to get into trading? How much is it going to cost? How much money are you losing? Blah 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 blah. I'm going to suggest Lucid to all of you when we get to the point in the course to where we're ready to get you accounts and start trading yourself. This is called a prop firm. Okay, what a prop firm is, these companies give you access to larger margin accounts for very little money. For very little money. So once I suggest, and they will be Lucid Flex accounts to be specific, it'll practically cost you $70 for a 24 size account if you want. I will always want to recommend the smallest. Get one of them. Um, There are rules you have to follow, but you can get access to a $25,000 account for 70 bucks, which sounds crazy. I know there are rules you have to follow, like the profit target. These are evaluations. So you pass the evaluation, you get to a funded account, and then that's when you start getting paid out after following the rules. These are evaluation accounts. Again, the 25K for 70 bucks. You have to do things like hit a certain profit goal without losing a specific amount of money. Now, when I teach you risk management, when I teach you entry models, risk reward, control the mental behind trading and all of that, prop firms will become very, very easy for you. The hardest thing about trading is going to be your mental. You're going to lose trades. You're going to want to keep getting in the market. You're going to want to gamble. You're going to want to gamble. You're going to get your money back. Trading psychology is the hardest part about trading. I'm going to teach you the fundamentals, the easy part. That's going to take a couple weeks, maybe a couple months to really hone in and perfect the strategy. But fundamentals aren't that hard. The hardest part is absolutely going to be detaching yourself from the money you're spending and wagering the money that's not even yours. Because technically, if you were to get this account, all you're in for is 70 bucks. That's it. And you're going to be making trades on here that may be, $100, $200 or so. And you're going to feel so attached to that. That money is not yours, brother. I promise you. It's going to be so much easier said than done. But we're going to get there. We're going to get there at some point. But this is just we want to show you what you want to get into and what we're looking at. Um, and the next video, we're going to talk about candlesticks. So I know you probably see these everywhere. You see the charts, see the candles, don't really know what any of this means. I promise you, we will make this super, super simple for you. Honestly, before this week is over, you're going to understand so much more than where you're starting at right now. But yeah, back to trading and trading futures. I love futures. Um, Again, especially with prop firms, my risk is very, very minimal. Now you can have multiple accounts, but you're getting access to large amount of margin, very large size accounts for anywhere between 50 bucks to a couple $100 depending on the account and how many you get. And the flip side to that, if it does turn out to be successful, you could come out with thousands of dollars in profit. I think that's really, really cool. Um, I think the futures market is very, very volatile. You see a lot of movement, and price typically only fluctuates or get crazy with news, high impact news. So, for example, this week, this is called Forex Factory. This is what we keep open every morning to see at what time news will be released. And typically, the most important news is red folder news, which we see here on Wednesday. We'll have FOMC news, which basically the Fed is going to determine interest rates, and that is what highly affects the market. The value of things, the value of the dollar, the interest rates. Those are really the only um, news events that affect our market. Um, but other than that, this market is pretty straightforward, guys. We go into each and every day, bust out our technical analysis, try to see what even this trade today, which there'll be a recap on as well. We did a little analysis. We'll do an analysis. We want a price to go up today. We found our entry, aim for our take profits. It's really that simple. There are some outlier things that can affect the market, like president tweets. War news impacted us a bit because we had things going on with the Strait. It was changing oil prices, things that affect the value of the dollar. It's just a bunch of things was kind of altering the markets. And now that we're kind of stabilizing, the market is hopefully getting back to normal. It's a really, really good time to get into this and learn this. Futures are really, really great. Again, you have access to a lot of money, risking very little. In the same breath, you can lose it as well, but it's not going to cost you an arm and leg like everybody thinks. See people on social media making thousands of dollars and doing this and that. Honestly, and it doesn't even cost them that much using prop firms. That $25,000 or $50,000 account, I may talk about or they talk about did not all come from our pockets. It's not all gonna come from your pocket, thankfully. Um, so yeah, even though this market is becoming super saturated, it is a really, really good time to learn for a very low cost. All you have to do is sit down, take notes, get back in that classroom for a little bit, learn a couple videos, watch a couple videos, and you'll really get started on your way. Um, what we have next, again, we're going to learn about candlesticks, candlestick anatomy. Then we're going to start talking about market structure, a bunch of other fundamentals that's really going to get you to understanding what you see on my screen on a daily basis. I know you're excited. I'm excited. I'm not going to hold you up too long so you can get to the next one. Appreciate you for coming, guys, and I'll see you there.